the Happy Tuesday, September 23rd of Lenders Online Training, and it is my incredible pleasure to introduce you here to Joe Davis, our newest credit trainer with the company. We also have David here, who's been with us for years now. Welcome, gentlemen, to the live stream that you guys usually run.
Thank you, Brian. It's a pleasure.
Pleasure to be here.
Now,
on this side of the table.
All of you know David, basically.
Yeah.
Everyone knows David. And what I'd like to do here is I have a bunch of questions for Joe, for people to get to know Joe a little bit more. But before we do that, I want to hear more from David, because you got to work with our founder, Linda Keith CPA, for years, understanding what the Linda Keith way is that this company is founded on and how that relates to your decades of industry experience in the credit field. So, David, could you share with us a little bit about what makes Lenders Online Training something that you felt worth sharing your energy with for the last couple of years?
Yeah, well, thanks, Brian. It's kind of interesting, as I mentioned before, to be on this side of the table. When I had an opportunity to meet with Linda, I actually took some of the I took the online curriculum that we offer right now about 3.5 years ago, and enjoyed it. I was not in banking at the time. I was part of the I am part of the America's Small Business Development Centers. So that is the other gig that I work with, working with small businesses. But I wanted to get a deeper understanding of income tax analysis. I had been a banker for many years. Maybe I should say I'm a recovering banker, as they sometimes will use that analogy. But I really wanted to understand the intricacies of financial statements and the income tax returns, because I was working with clients that I work with bankers and clients to do projections and stuff like that. So I enjoyed the curriculum so much, had the opportunity to joke around with Linda. She is a very, what we'd always say, a very cheerful, a fun-loving individual of way she teaches. I just feel like I connected with her based on her fundamentals of how she comes across into the details, yet you just feel comfortable with asking any type of questions. So all through the curriculum, I learned so much into the details, and I'm kind of a granular, detailed individual when I look at financial statements or income statements. But what I like about it is, in a nutshell, is our foundational learning, the details of the curriculum, and getting sometimes into the weeds, but understanding what these mean when we're looking at these complex tax returns and all the different numbers, realizing that not everything makes sense. We don't have to worry about certain things. She put me at comfort with that and followed along with her. She asked me if I would be interested in teaching. I chose to do that. And I've enjoyed it for the last 3 years, and I've learned so much. So I'm very thankful to Linda for bringing me on board. And she still teaches me today when I have questions. So I love that about her.
What I love about you, David, is you bring so many different fields of experience together. You have your time in banking, you have your time running a manufacturing company, you have your time with SBDC. And so you have a level of having seen what makes sense or does not make sense that you bring, and then you layer alongside that Linda's body of work and her decades of teaching this particular credit analysis conversations. Mm-hmm. And that union has been beautiful to watch as you're able to share stories that Linda really is not in a position to, because she did not spend a decade as a banker, 8 years in a manufacturing company, how many years have been with SBDC. So you share something that is different than what Linda herself alone could share. And let's bring Joe up here. I'm really excited to bring Joe into the Lenders Online Training community here, because Joe, you have a similar, you will be able to tell stories that Linda can't tell. And as we layer your level of industry expertise alongside the Linda Keith way embodied in all of her writings and all of her courses and everything she's built here, I'm excited to see what's going to happen there. So let's bring Joe up here. Joe, can you share with us a little bit about your professional background?
Yeah, absolutely. Thank you, Brian. And I just want to say it's an absolute pleasure to be joining this team. So my background, I started in banking in the late 90s when I was in college at Michigan State. And so I have 27 years of banking experience, most of that in commercial credit roles, particularly leadership roles, but did some lending as well. So was with several banks over the years, from a 2-branch $100 million institution up to a $150 billion regional player. So I've got a really broad range of experience of bank sizes, types, how to do things. A lot of C&I, so commercial and industrial experience, also a lot of CRE, commercial real estate experience, and some ag. Went to Michigan State University. I have a BA in economics, then University of Michigan Flint for my MBA, and then I graduated from the Graduate School of Banking in Colorado as well. So I'm a lifelong learner. Absolutely believe in training and development for myself.
Dave,
but also
what are you
share.
laughing at? Joe gets to call himself a lifelong when we've had this conversation. What are you laughing about?
Hey, I'm the same way. I never want to stop learning. That's why I took the programming language. Yes.
When you're young, and
Right.
you hear those old people say, the older I get, the less I know. You think you're being stodgy, Grandpa. Go back to bed. And then you get to be older, you're like, oh no, I'm an idiot.
No, love
I
that.
don't know anything. And I'm getting dumber every year. So let's hope we're all lifelong learners, because there's so much to learn.
Yes.
And even just, Joe, with what you're sharing about your level of experience in CRE and CNI, you and David are actually building us a new course, which we're going to be debuting later on a different live stream, folks. But they're working on building a CRE course, because that Linda has content throughout that applies to that. But we have 2 trainers here now that have spent a significant amount of time involved in those kind of deals and looking at what are the problems and what are the gotchas. And so, Joe, we're already working on using your particular experience. It's really exciting. Now, we wrote out some questions in advance, because here's the story, folks. I get to work with people that are very detail oriented, like Joe, like David. I'm more of a let's just ask people some questions. Everything can be in the moment, man, which doesn't actually work for the people that really thrive on accuracy and detail work. So I hire people smarter than me. That's my answer to the I don't know anything problem. Look at those listed questions that the team's already looked at because they plan ahead. So one thing is, 25 years in banking, 27, as you said, you've been a CCO. What are the biggest training gaps for the analysts and lenders when you were looking at that community bank size? Let's say under 10 billion.
Yeah, you know what really concerns me the most with the training gaps, Brian, is just fundamentals. Years ago, banks had very formal training programs. It was very intentional. And a lot of that, unfortunately, went by the wayside over the last, call it 15 years, probably as a product of the Great Recession. So banks, cut costs temporarily in order to get through the Great Recession. Those things haven't come back. So it really concerns me that bankers aren't getting the fundamentals early in their career. They're expected to learn on the job, but it's just so short-sighted.
What's going to happen if the industry does not choose to renew the investment in training your frontline staff?
Well, 2 things have come to mind, certainly. One is credit losses. If you have staff that don't have a good base layer and you're expecting them to go out there and make decisions, you're probably going to take some credit losses, some loan write-offs, right?
But the stock market's at an all-time high. Everything is booming, right? So why should we be worried if everything's going well?
We are overdue for 2 recessions. So historically, recessions happen every 7 years. We haven't had a real one since 08, 09. No. So we're overdue. It's going to happen. It's not an if, it's a when. So, you have to always be looking forward and guard your backside, because it's not if, it's absolutely when it's going to happen. So the problem is the best loans you make in your career are the worst loans, you make in your career are during the best times. Things are good, we get complacent, we make loans, maybe we didn't go into as much detail, or maybe we didn't structure them appropriately, or maybe we just thought things were going to be okay. This is the time right now we're making our worst loans as an industry.
What does it feel like? Because you've lived through it, you've been in business for 2 or 3 recessions.
Mm-hmm. Yep.
What does it feel like when the recession starts to happen and you're looking at your loan portfolio and you realize you made some decisions or you're involved in some things that could have been better thought out? And or maybe it's not you, maybe it's your colleagues. I don't know. But it sounds like there's this moment in a recession where people realize, whoops, maybe I shouldn't have done that. And David, question for you too, because you've been involved for a significant period of time. Mm-hmm. What does that feel like?
Well, the scary thing is about a recession, you don't know you're in a recession until you're already in it for several months.
Yes.
You know, there's a lot of people out there right now saying we're in a recession right now. And it certainly doesn't feel like it in a lot of sectors, right? Mm-hmm. So you don't necessarily know until after the fact that you're in it. But to your point, hindsight is always 20/20. When you start seeing the economic weaknesses come in, you think, gosh, what do we have in our portfolio that I'm worried about that I might want to try to do something about right now?
Well, the tariff looked there are some companies that looked fantastic, and then something outside of their control happened that they have no ability to change. And mm-hmm. suddenly they went from being the best companies in the world to maybe you'll survive till next year because and then the current H-1B conversations where there's some companies that were doing fantastic and then something happened outside of their control. They have no ability to control it in the short term. And very strong companies suddenly are questionable because they just don't know. So for the question for David and for Joe, how do you train frontline, your loan officers, your credit analysts, your underwriters, how do you train these people to properly zoom out and look at all the potential risks so they can make good decisions when even just those two examples, there's not actually a way to predict them. You actually can't. There's something in 2026 that we just can't see right now because we don't see it. How do you train people to understand that level of risk?
Brian, it's interesting question. Because we talk about the just the evolution of the kind of the transition of a lot of the I'll say myself as an old timer as a lot of talent is through attrition is basically retiring and moving out of the industry. The next mm-hmm. generation or generation behind that are just coming in. And in our training curriculum, I do weekly webinars, and one of them specifically is on credit risk in the industry that we deal with. Linda actually did a survey probably 5-6 years ago, reached out to over 250, I think, CEOs, bank presidents, credit analysts, chief credit officers, and really focused on the Great Recession. Now, granted, she did the survey in 2018, but it was reflect upon what happened in 2006 and 2008. So many of the participants in our online curriculum, of course, this is kind of new to them. They have only been through maybe one recession, maybe, if they were at 2006. Now, granted, when we get into COVID, that was unique to everybody. That hit us, really slapped us in the side of the head. And yes, it was a recession for 2 months, and we knew we were in a problem. So many of these students or participants have never been in it. So it's an opportunity for us to open our eyes to the point of what Joe had mentioned before. It's not if, it's when. These are cycles that go up and down, and you can go through history and see about every maybe 7, 8, 9 years, there's something, right? It may not be long, but it may be something. Mm-hmm. We haven't had that for a while because I really take COVID besides because that was totally a fresh perspective on something. So here we are in 2025. The last one was 2007, 2008. So it's 20 years.
To me, when we lived through that recession, have I told you that story?
No.
Lost my job. I was a salesman at an internet marketing agency. And when I got into the workforce in 2006, graduated college, mm-hmm. entrepreneurship degree, was doing client services for this marketing agency, moved on to the sales side, had an incredible first month, thought I was really hot. Reality was I got lucky twice, really lucky in my first month. I had some skills as well. It wasn't completely random, but I did not understand how to generate those results consistently. And that was in 2007. And then here 2008 comes around and I'm not getting those numbers that the boss needs to see very reasonably. And he says to me, well, okay, you have until the end of the summer to produce these level of numbers to justify you being here. And it was something like, I don't know, July. I was looking at my lead flow and saying, I don't think I can make those numbers. So I said, I'm just going to stop now because I'm not going to waste your money for another couple months. But that was, if you ever hear my story about I'm going to go off and, travel the nation for a while and be a farmer or something. That was a recession. That was I'm not as good as I thought I was. And I thought I was really good. I made that guy a lot of money in a sales role. And I thought it was because of me. No, it was right place, right time. But to understand that as what was I, 22, 23, just out of college, to understand I was in the right place in the right time through almost no fault of my own. And to get that understanding. And so I think about, and that was my experience, but even a person who graduated, let's say 4 years later, if they never got that experience of sometimes it's not you, sometimes you win, but it's not because of you. You got lucky because right place, right time. But how do you assess if you're good or not? It's a question back for Joe. How does a credit analyst or a loan officer know if they're doing well, or are they like me, just right place, right time in 07?
Yeah, it's a really good point. So companies and banks are going to do well during economic booms, right? It covers up a lot of ugly. Maybe they can afford to be inefficient or ineffective in the sales process. Because the economy is doing so well, you don't see it. That's my point. It's about fundamentals, right? We have to make good, disciplined loan decisions, even when times are good, and especially when they're bad. We don't loan 100% loan to value on anything, right? You just don't. You put a cushion in there of at least 20% because Murphy is going to show up at some point. So when Murphy shows up, you need to make sure that you have cushions in cash flow, in collateral, and working capital, et cetera. Not to get too techie here, but that's my point, is that when the tide goes out, you figure out who's not wearing a bathing suit, to paraphrase Warren Buffett.
Yeah, you should definitely be techie. That's great. What I want to know is, how do you, there's the government saying, okay, it's the 3 months of contraction, whatever, but how do you, as a leader in banking, how do you notice when things are starting to get weird such that you tell your frontline staff, start to be more cautious? How does that information flow from the person at the top or the organization at the top of the institution down to your frontline team?
Well, two things come to mind. One is portfolio monitoring, right? Is keeping an eye on the portfolio and the metrics. But we all have to remember, when somebody stops paying you, in other words, when they stop making their loan payment, it's too late. So you have to you have to review your portfolio in other ways, not just delinquencies. And number two is just being cognizant of what's going on in the world, right? I've got a customer who has international dealings. Okay, there's a tariff talks. What's going on? How's that going to impact it? You have to get out in front of it. You can't be reactionary. You have to be proactive.
How much is that you just paying attention, and how much of that is asking? Because there's probably some people that were slapped hard by the tariff situation that saw it coming and did the best they could to prepare. There's probably some other folks that woke up on a Monday and went, wait, what? What are you talking about? That they weren't prepared. So there's some limit to asking your customers and saying, what are you worried about? Where you have to be able to tell them, you should be worried about this. And there's some level of, what are you worried about? How do you guys decide, or how do you coach our students and how to decide how much to do with either of these things?
I think some of it comes down to just common dialogue with their clients. Feel comfortable to become an advocate of your client. Know their business. And quite honestly, they know their business very, very well. Have them teach their business to you. You can interject some of your knowledge that you've been following on the industry, but ask questions to say, I know all this tariff stuff that's going on. I imagine that affects your industry. Talk about it. And they will. Now, they may not understand the intricate details. They may not have seen any adjustment to their prices coming in. But knowing that you're an advocate as a lender, I think that's the important part. We talk about a term, relationship banking. It's been in the industry for decades. But really, what does relationship mean? I want to be there when times are good. I also want to be there when times are not so good. And I want to know that you have someone that cares about your business and that I learn from that. So I think if there's anything with our lenders, the more that they're proactive in asking questions and engaging with their clients, and quite honestly, engaging with their senior leaders on their staff, learn from them because they've weathered some recessions. It happens. And how do we adjust for that? But most importantly, how can we as a bank still be there when our clients are challenged by what's going on? We want to be there as part of the relationship.
It's a really good point, David. I think you build a lot of credibility with your clients and with your financial institution by taking a long-term view and not just kind of riding the wave with everybody else. I think if you show that you're in there for the long haul and you're doing good loans with strong fundamentals to good companies, I think you've got a longer term career than just the people that are sort of looking at the issue du jour.
Mhm.
A while ago, I called my bank that I used for my business banking, and I asked for my person, and they said, "Oh, Valerie's no longer here." And I said, "Oh, well, where's Wendy?" And they said, "Oh, Wendy's no longer here." I said, "What are you talking about?" But my two main people had exited this particular institution, so I ended up talking to the bank manager, the new guy, right, and chatted a bit on the phone. And so because of what I've learned from working at Lenders Online Training, I then drove there and chatted with the guy. Said, "Here's everything I'm doing. Here's what I'm worried about. Here's my opportunities coming up today, a year from now." And I just chatted with this guy for a while because I thought, I know that I want Kevin to understand what I care about, what I need, to understand what he's looking for to some extent. But really, here's my funding needs over the next whenever. Because that idea of you need to know someone, can you trust this person? In addition to all the numbers, of course, have to work. But that, do you trust them? Can you sit next to them and have a conversation about whatever it is?
Mm-hmm. Should be able
and you
to
guys don't understand this, but Kevin also is bald. And so one of my companies, we make a skin cream that's fantastic for after you shave your head. You guys won't understand. But so I gave him one of those, like, hey, here's one of my companies. He really appreciated it.
It's nice bonding.
Yeah, I like that.
Joey, this is what you shave. It's actually, it's great for anyone on the call. Really, after you shave your head, shave your beard, it's fantastic.
Nice.
So,
nice.
It was probably a unique thing, right? This guy probably does not call people and say, hey, the previous bank manager is no longer here, but I'm here. And then they try to, hand you some skin balm. So I want to be memorable, I'm the fun client.
That's right. He won't forget you.
Let's go back to this nice list of questions we had here. There's this great question here. You guys have such good questions. Many banks rely on the front page of tax returns. From your experience, what risks does that shortcut create, and how does LOT training help solve that? Question for either of you.
Go ahead, David. You take it first, and I'll certainly chime in.
Okay. I mean, quite honestly, before I came into the course, that's all I relied on. I mean, I had financial statements, but I would go to the tax return and just look at the front page. What I came to realize through the training, through my conversations with Linda, that a lot of times the tax returns per se are written by the IRS, right? And the CPAs that prepare them. For us bankers, they're not necessarily written for us. So when we see all the data on there and all the different accounts, it's like, oh my God, what is important to me? As lenders, we focus on cash flow, right? It's pretty simple. We just want to get our money back. And what do those items impact for that? Now, since I've been training this, you will often hear me talking about red lights and red flags and green lights, is whether it's a financial statement, whether it's an income tax return. The numbers tell us a story. They're just a scorecard. What's the story behind those numbers? There's critical factors when you're looking at year 1 to year 2 to year 3 is what changes happen? Why? Does it make sense? What is the story behind those numbers? So as a prudent underwriter and a lender is they're going to look at these numbers, but then look for trends, look for outliers, and want to know why. Ask questions. Does it make sense? So I think we further get into some of the deeper part of the tax returns through some of the schedules that impact cash flow. Because understand that tax returns are based on what we have to pay for income tax. They don't necessarily spell out that these numbers are strictly for cash flow. That's where we help our trainees basically as here's where the trail of cash flow is from this income tax return.
Well said. I think you covered that really well. I would just underscore a couple things you pointed out. The first page is not necessarily cash flow. Cash inflows and outflows. It's just taxable income. And we're using tax returns for a purpose other than what they were intended. And what I really like about Lenders Online Training, I've just completed the content myself. What I really liked about it takes a very intentional approach to pulling apart all of the schedules. And really, the phrase I use is demystifying. Because, I mean, gosh, we've all seen tax returns that are 300 pages long, right? Lenders Online Training does a really good job of saying, here's where you need to focus and here's what you need to do with that. And then you don't need to worry about all these things. And so that's really good and helps people get centered up very early and very, very appropriately on a deal.
Excellent.
Very focused on, yeah. When people want to work with Lenders Online Training, I get to be the person who hops on the phone with you and talks with you about what are your problems, can we solve them? And sometimes I get to go share my screen with people that want to hire us. And my single favorite thing to show off from inside our training, can you guess what it is? My favorite page of everything in our entire training. Can you guys guess what it is? This is not a primed question, by the way, folks. What would you guess?
Table of contents.
That's smart. I always show that. But my favorite thing is the write-up, and specifically the case study having to do with a financial statement analysis write-up. Because what I get to tell people that are looking at working with Lenders Online Training, I say, here's the point of all of this, is so that you can take the numbers, you can tell a story that is coherent and that reflects reality. So as you're making a loan decision, you can, and getting everybody on the team able to go say, based on all the numbers that we believe are true, here's the story. And Linda likes to say that you need to have both of these things together to make coherent decisions. And I think that more than anything else in our course, that idea that I see prospects going, because they realize, wow, if all of my lending team, if they could all tell a story in this kind of fashion about what's going on here, then we could look at all the stories, all the numbers together. This would be a better process, and we make better decisions as a team.
You know, Joe and I chatted about this the other day with regards to write-ups in general. They've changed over the years. They become more leaner. They become more outlined, and your focus is on the numbers, is on the spreads. And quite honestly, I think it's a disservice to those, first of all, that are underwriting, but also the lenders. Is at times they're missing the story. Now, maybe they understand it and they can communicate it verbally. Well, when you're in a loan committee or you're on a conference call to someone else that's reviewing the loan, the story gets just doesn't come out. And I think that's where we stress our test. We actually had a participant today. We went over the review, one of our case studies work that was on the financial statements. He really enjoyed it. He said, granted, part of it was he had to actually kind of coincide and make up the story. It's not about things went up, things went down, things changed from this part of the year to that year. It's kind of the white space between the numbers. And he enjoyed that part of the write-up and kind of sees that art maybe has kind of diminished over the years, and some of it needs to come back a little bit.
You're speaking about judgment. Back in college, I studied entrepreneurship, and we had a bunch of entrepreneurs alumni come back and talk with us. And I don't remember what even the question was, but someone said, oh, you just need judgment for that. And I said, well, how do you get that? And they say time. I say, no, but how do you get it? How do you, like, what book do you read? What class do you take next quarter? Like, no, it's judgment, it's time. You have to go just sit and do the thing for long enough to feel it, to intuit the truth.
I agree. I'm a sports fan. And so I say, at bats, you got to get the at bats, you got to get the gray hair and that sort of thing.
How am I doing, Joe? Rate my beard.
You got some time.
Am I in the Hall of Fame yet? I should be in the Hall of Fame, right?
David, there's no question you've had your at-bats. I'm still working on it. Joe has no white beard and very colorful hair, so I don't know. But yeah, for 27 years, in banking, so I think that's good enough.
But there's ways to compress that time too. It's not just, hey, you have to be in banking for 27 years. Formal credit programs, training programs, like what we're talking about here, helps to compress that time. Spending time with more senior lenders helps to compress that time. You don't have to take the lumps yourself and learn the hard way. You can learn from people that have done it before and seen it before, so that you can sort of model behaviors from there.
And outside of your normal deal flow, because most lenders I talk to are busy, and so somewhere between busy and too busy. And so someone who spends 3 or 4 hours a week with one of you, and that's outside of their normal, get this done. Here's your inbox, right? They're outside of their inbox for the time they're spending on the phone on Zoom with one of you guys. And so now they have a chance to ask some questions that maybe they would ask if they had unlimited time, but they don't have unlimited time, so they can't ask them. Yeah. And so there's this time. So let's stay on this theme of time here. How long does it take a new hire, and let's say they're a market hire from some other institution, but how long does it take to get them really productive on a lending team when a bank hires someone new?
I always tell people, if you put forth the effort, I'm going to put forth the effort with you. I'm speaking as a leader to a new hire, for example. You're going to be fairly proficient in 6 months, and you're really going to feel good about what you're doing in about 18 months.
Okay. 6 months to get anything done, 18 months to feel good about it. David, does that roughly match with your experience?
That's usually what I was, because I was so overwhelmed with just the input of what I was reading, but it was truly about anything in the learning process. It's the application, right? I can read it, I can listen to it, but until I start doing it, that's where we get into now that 7 months through, maybe 17. So now I feel comfortable in that. But now there's the last pinnacle, me sharing that. So the full evolution of learning to me is being introduced to the topic, using applicant, but feeling comfortable that I can now teach people. And then I think now we get into month 19 to 24. So it could be a 2-year journey, but now I understand it and I can teach others and be an advocate for them.
Great
Beautiful.
point. Communication comes from confidence. Confidence comes from time and experience, and that process does take some time.
Talk to us about what happens when someone hops into Lenders Online Training, they get hired by a new bank, and one of the things that we promise is we're going to accelerate how long it takes someone to become a contributing member of your team. You guys are saying 6 months to be basically contributing, 18 months to feel comfortable in that. What happens to someone who applies themselves to our training, whether it's the 4 or the 8-week version?
I think that there's 2 factors here that involve. First of all, they're introducing themselves to something they're probably uncomfortable with. We've dealt with some individuals that are relatively new to credit. They just came on board of their institution, and this is kind of one of their onboarding tasks that they want to do. We also have others that have been in the lending process a little bit. They have been analysts, but they never got deep into the analysis of income tax returns and how to evaluate those. So what we do is just say, we are here with you, and we do give you, it's not, I know we say 4 to 8 weeks, we're still along the journey. And quite honestly, we've done our live streams. Linda and I would get on and we would actually talk about topics, little snippets of information that is kind of what would you say, the drip method of learning. We're always available for you. Our Ask the Experts that we've done. We've had people that have been in the industry for a long period of time ask us questions. And we're always there to respond, so they feel confident that through today's date of changing times and changing regulations, if I don't know something, I can reach out to Linda, David, now Joe, and they'll come back with an answer to help me in my process.
I've worked at this company since I was about 5 years old. And what I've come to understand is that mastery is a myth, mastery of knowledge. You can master a process of how to ask questions. But to your point, David, about people, deeply experienced people give us questions Linda's never heard before.
Yep.
That's because there's an infinite possibilities. You can get really good at a process, though. And that's what we're doing at Lenders Online Training, is we're helping you get good at a process. So you're going to be better able to go understand what you don't know. Where's the potential weird things in this particular application? How can you go look around this? And then ask better questions of your borrower, of your boss, of us if you need help from your trainers, all that. Well, this has been lovely, Joe and David, to get to chat with you guys live. Joe, what final thoughts do you want to go ahead and share with everybody watching?
I guess I'd just say, Brian, I'm just really excited to be joining this team. A lot of these topics can be kind of dry and kind of, technical. And, what really attracted me to Lenders Online Training is that we make it fun. We make it interesting. We keep it light. We have a good time with it. And, I think that's important, because otherwise, this stuff is a little challenging to learn a lot of the time. So I think it's a really good approach, and I just can't wait to roll up my sleeves and help to develop the new content and continue to deliver the existing content that I think is fantastic.
Well, we're excited to have you here, Joe. I think that dryness is part of the problem, that it's so easy to check out. When I'm talking with banks and credit unions that are looking to hire us, and I always say, well, what's your current training regime? What do you do? And a not small number of them say, well, we have webinars. Oh, so do your lenders really enjoy watching webinars? Well, no, they're required to.
Yeah.
Oh, so they're not that engaged? Oh, no, we don't. And there's just a lot of this. They take training because they must, not because they want to, not because they perceive it to be valuable. And the feedback, because I get a look at the feedback forms people give after they go through this class, the feedback of, oh man, David taught me this, David taught me that, Linda taught me this, Linda taught me that. Soon it'll be Joe taught me this, Joe taught me that. The idea that training is a valuable asset to you, as opposed to a burden that you must do because otherwise bad things happen to you, that's sort of the point of this company at this point is there's a lot of lenders in this nation, and a lot of them are suffering by having training that's boring. And it's not because it's boring, it's not good, even if it's technically accurate, that it's not going to help them make better decisions later. And we all rely on lenders making good decisions. As I like to see, almost all good things begin with a dream and a loan. And so what we're in the business of at Lenders Online Training is help all loan officers, all credit analysts, all underwriters nationwide make a little bit better decisions for the rest of their careers. And that's how we're going to go help the whole country, because the small businesses, the farms, all the people that we lend to, that is what forms. What is it? David, you probably know this number offhand. 80% of Americans work at small businesses. Is that right?
Well, I think if you really get down to the nitty gritty, and small businesses are classified as anything other than 500 employees, but I think the gist of most of them are 20 employees or less. That's Main Street. We have a lot of them, and it is a high percentage of businesses there.
Yeah.
Now, one thing I want to touch a little bit about the relationship here before we get to the close is I'm amazed by the people that still reach out to Linda that, I've taken your course 10, 15 years ago. Is we're here for the longevity. We truly believe in relationships and helping you and knowing that we're still here for you and we are part of your career. That's why this course, this curriculum was designed, is we want lenders to feel good about their professional development, and we're just not one and done. And that's why we've designed this program. Yeah, it starts out fundamentals, but it's amazing how everything grasps it back to that. So knowing myself, knowing Joe, we've walked in your shoes. I think we enjoy the fact of sharing our knowledge so they can be better lenders.
Great.
Beautiful, David. Linda started the company in 1979, and so that's how long we've been around for. And as everyone can see here, we have more trainers coming on board to help continue in that mission of helping lenders make better loans and helping those small businesses survive in the good times and the bad times, and just keep on going and keep on making things better for everybody. If any of you want to talk with me about your bank or credit union getting training for your lenders, I'm at lendersonlinetraining.com. You'll see my calendar there. And then /talk, you can choose at having my calendar to go have a conversation. And I'll just be asking you about, okay, what are you currently doing? Why don't you love it? Because you ought to at least love your training, at least some of it. What's your team say about it? And what are you looking to get? Are you looking to get more consistency, more competence, more confidence? What's your lending team really missing right now? And then when you inevitably ask me a really detailed question, I say, you know what? David and Joe work at Lenders Online Training, and they know a lot of the technical stuff. And then I scribble down your question, I hand it to them, and they email you back with the answer to your very detailed question, because we have our trainers that have decades and decades of experience to help your newer hires, your younger team members, including also your team members that are transitioning. We have some folks, they've spent a decade doing a residential mortgage focused. And they come to us and they say, well, I have a lot of experience, but the bank is shifting me over to this. I want to get a promotion. I had one guy where he'd been in this one part of the institution for quite a while. He wanted to get promoted. And he said, okay, I need to learn this, that, and other thing that I don't have a deep background in. So that was fantastic. Excellent. We'd love to help you out with that as you advance your career. So lendersonlinetraining.com/talk. David and Joe, thank you both for being here. And thanks everybody for watching. We'll see you later.
Thanks, folks. Take care.
All right, take care.